Okay, in today's episode, we have Frank Holmes. I first found Frank discussing gold on Kitco. It was a few years ago, and that became really a fascination into understanding the gold industry more and more and more. And so I'm excited to talk to Frank here today, who is someone that I absolutely love to listen to on trends and kind of the macro movement of our economy and of our world. And so if you're excited about this episode here, please make sure that you hit the like button on this side or this side right over there to send this out to more people, and make sure that you give us a comment right there down below with your gold or silver price prediction for the year. We'll be certain to ask Frank that later in this episode. And thank you to our sponsor, Vizsla Silver. And it's good to see you, Frank.
Great to be with you, Jake.
Okay, so my first question before we kind of dive in a little bit more to the ways that people can prepare themselves, there's still so much uncertainty in our world, first of all, and in our economy. And then there was, recently we've had corrections and some sell-offs in the market, and people don't know what to make of the 10-year. And so there's a lot of fear. One day it seems like everything's fine again, then the fear's back. Certainly the economy, it has a lot of question marks. And so there's this question of inflation, deflation. Is the market going to crash? Is it going to go up? What is your assessment on what's happening right now, and what are you expecting moving forward?
Well, I'm a big believer that government policies are a precursor to change. And when you look at the world, it's so complex and so many moving parts. But fascinatingly, you can take it down to a binomial model, like zeros and ones that create the internet. When we look at government policies, it's either monetary or fiscal. Monetary is money printing and real interest rates. That is what the government's going to pay you to buy their government bond over the inflationary rate. And fiscal is tax and spend and regulations. And so there's an imbalance. So whenever there's been an imbalance in those monetary and fiscal policies, then gold starts to light up the world and starts becoming this attractive asset class. Mind you, Main Street, Wall Street, New York is always negative talking heads about gold. But I like to remind people that this century, in the past 20 years, gold has been up 80% of the time, and gold has outperformed the S&P 500 by 250%. So it would only be wise and prudent to have 10% weighted in gold and rebalance each year. And that is what Ray Dalio, the largest hedge fund in the world, Bridgewater, has been doing. And sometimes they go up to 25% in what they call their parity trade of owning gold as an asset class. So diversification is important in that. And so what drives gold, I always get asked. Well, a lot has to do that I think is this MMT experiment, modern monetary theory, the acronym stand for. And it's being practiced differently by the G20 nations. So what South Korea does is different than what you're seeing in the US do, or Japan, or Germany, or France. But they are printing money at an incredible rate. And they're trying to use this money printing, just money out of nowhere. And they come in and they influence the capital markets by buying ETFs. So this time last year, when rates collapsed, the Federal Reserve, to get rates down for municipalities rolling over their debt and corporate bonds, because those stayed at elevated rates, even though the Federal Reserve rate was down here, the cost of money was actually quite dear. So what do? They bought ETFs and they bought munis, and they forced the rates down, and they bought corporates. So that's different than Japan, which is basically owns 15% of the stock market through ETFs. Switzerland, they basically print negative real bond yields, and now they get real money and they go buy Apple, they buy Microsoft, they buy real stocks, they buy Cadbury's, which the dividend yield is higher than what they have to go pay. So we're seeing a complete different shift around the world. South Korea practice giving money in a community, but the money can only be spent on small businesses within that area. So everyone got $1,000, but you had to go to the nail clipper, get your car cleaned and only buy a local. You couldn't get a McDonald's, you couldn't get any major, to try to stimulate local economic growth. So as this experiment has grown bigger and bigger each 4 years, we're seeing, then this money printing is now $2 trillion here, $2 trillion in Europe. Now it's going to have a pent up towards green. Everything's going to be green and infrastructure. So one has to put on their hat and say, well, what can I buy? Well, they're going to need metals. They're going to need copper. They're going to need lithium if there's a big green movement. And you're going to see metals all of a sudden come into a unique build, a super cycle for those commodities. And so that's the type of thing I look at. And inflation, well, I'm a big proponent. It's fake news. I mean, I just really think if you look at the CPI, and John Williams has his Shadow Stats, it's a great publication. If you look at CPI, what they say is 1.7%. Well, it's 1.7. That's why the 10-year government bond went from 50 basis points this time last year to 1.7 to basically come from a negative real rate of return to a positive. What did that do? Well, it really started to make the market scared when the 10-year government yield was greater than the dividends, the dividend yield. And so these are melting points like ice to water at 32 degrees. It's a tipping point. So that creates an uncertainty in the markets, and pension funds all of a sudden stop buying dividend paying stocks, indexes. They end up buying bonds, and you get those shifts. So it's bond 10-year yield, dividend yield, and it goes back and forth each month, each quarter, where money flows to. And that's why I try to understand government policies are a precursor to change, to understand the economy, what's going on. But I think this unprecedented, if you look at the CPI number, Jake, if you use the number used in 1980, it included food and energy. If you included food and energy in the CPI number today, inflation is at 8 or 9%. I personally feel inflation is running at that. I'm looking at renovating a house. Guess what? My lumber prices are up 100%. Steel prices to build a new house are up 70%. The cost of construction where I live in San Antonio, Texas, have basically gone from 200 to 500 bucks for a brand new high quality house. So there's embedded inflation. I just published a piece on showing used cars. Used cars are up 23%. So the CPI is only 1.7. Give me a break. Food prices, avocados have doubled in the past year. The cost of transporting. I'm in the, as you know, the first crypto mining company, and moving equipment from China. The shipment costs are up 300% wow. by air and by cargo airlines and ships. So this CPI number is really fake news. And if someone can go and borrow at locked in cheap money, I just highly recommend it and go buy good dividend paying companies, because you're going to see that money is going to become, it's really a negative rate of return. And they can only keep these negative rates of return so long before the inflation number explodes. And maybe they'll take something else out of it to keep the inflationary number lower. Now, this has impacted gold. And a lot of gold investors get frustrated because gold usually moves with that fear trade of negative real interest rates. But if it's not about manipulation of the gold market, it's about the CPI number really doesn't reflect inflation. Real inflation that I think is more reflective is 8 or 9%. So if you can borrow at these cheap rates, I think that's wise. Used cars, guess what steel prices are going to, in 2 years from now, car prices are going to be up 70%. Why? Because the price of steel's gone up 70%. Someone's got to pay. It's got to pass through the boa constrictor. It just has to get digested through the system. So I do expect we're going to get higher inflationary rates.
Very interesting. So do you think, you said earlier something along the lines of looking at government policy is your precursor to determining. Yeah. So when you look at it right now and you say, they say the CP, there is no inflation yet, you're seeing, I even saw the head commodities researcher for Goldman Sachs says they now call corn Bitcoin. And so you're seeing these things, but the government says no. Do you think that essentially they're just going to keep saying that it's not happening as this trend continues and we get a reinflation move again in the stock market and we see prices rise, but they keep saying it's not happening until people start moving out of cash and start realizing, hey, my cash isn't buying me quite my grocery bills on my fixed income can now no longer buy me what I was been buying for the last 12 months, and there's a slow move out like that? Or what is your view on how this trend develops?
there is a tipping point. There's that where ice becomes water. There's a 32 degrees, and I think that food inflation is historically led to revolutions. The French Revolution that ushered in Napoleon was over food. The Chinese themselves are very, very sensitive over food CPI number. And I think that America as a country is a consumption country, and 75% of the GDP is consumption, and food is a big component of that. There's going to be, if there wasn't these checks being sent out everywhere, then I think you'd have a big backlash. But right now, this amount of money being put into the system and the mechanism of sending all these checks out to people, we have massive rising income. It's unbelievable discretionary income how it's spiked. And that means we're going to get a robust GDP. Some are calling 6 to 9% GDP growth. So I think that I look at PMIs myself. I read about it every month, what the Purchasing Manufacturers Index is doing, because it's a 6-month leading indicator, and it's highly correlated to commodity demand. So I have many commodity related funds, so it's important for me to follow that. And it's at big numbers, like China and America are leading the world, and now Europe's turn with all this money printing. So I think we're going to see great inflation. I think gold will all of a sudden get a wake-up call, and the rebellion against the change of the CPI number is going to come from the public. They're going to just say, we don't believe you. They're going to tell enough politicians, there'll be enough complaints, and all of a sudden they're going to reflect another CPI number, which is food and energy costs.
So do you then do you think that is fake news when people are saying everything's going to sell off and, we're headed into the greatest equities and overall depression in history? And people are saying move to cash, sell everything. And then you look at these inflations and then you look at, well, are they going to step in and do yield control? Are they going to is the Fed going to start buying stocks? Where do you fall in the camp in your predictions and your expectations of one, Fed and government policy, and two, how this influences the markets moving forward?
Well, GDP is going to be extremely strong because PMI is strong. PMI is a leading indicator. GDP is a lagging indicator. And as long as that PMI stays for the most of the world up at 55 to 60 level, we're going to see incredible GDP growth. The only thing that's going to derail that would be excessive taxation and regulation, because it takes money away from citizens and corporations and gives it to the government. That would be the change, and it'll be more reflective in different industries that'll have a bigger impact. So I just believe that alternative sources of energy, I believe, are going to stay robust and strong. I think that technology is going to go through its sell-off, but it'll have a big surge come back. And if you look over the past 150 years, everything great in America, every pivot point has come from a breakthrough in technology. And it's recognizing that technology is not just in chips, it comes in different ways. And I think this push on the concerns of global warming, doesn't matter if you agree or disagree, the amount of money that is being pushed and ushered down that channel is going to provide opportunity to first movers. And the amount of money printing is going to usher in why Bitcoin all of a sudden is like an Andy Warhol piece of art. Is a limited supply, more people believe. Now, better than Andy Warhol art, you can buy a fraction. So you can buy a fraction of Bitcoin. You don't have to go and spend $52,000. You can buy 1/10 of that and participate. So if more people believe it, according to Metcalfe's law, we could see this grow. And I think I like being contrarian, is that Obama, everyone was bad-mouthing Obamacare and all the reasons. Do you know the best performing sector was healthcare? Do you know that hospitals grew at a 35% CAGR and healthcare insurance companies grew like this? And you quadrupled your money during Obama's reign. So you had to have a contrarian mindset and head on, and not get caught up with what everyone is saying is going to happen. It's going to be inverted. Who would ever thought that this time last year, the JETS ETF, that we had the biggest price discovery in history with millennials coming in through, we know we had this experience through Robinhood, and they're going through sites like yours, learning about what's driving it. I had to find out it's predominantly YouTube and podcasts. So all these millennials, they're on their Peloton bike or listening to a podcast, or they're watching a YouTube. They're trying to find out about historical cycles. And we went from 40 million to $4 billion in assets. Buffett says he's getting out of the airlines, and Portnoy says, no, you want to go buy the Jets ETF. Well, all those kids that just through Robinhood, because the data was public, they bought Jets, and they're up over 80% of their money. What do you mean? The stock was at $12, and it soars to 28 within a year. That's a great trade. So I think we're seeing a new discovery, and I believe a lot came from Trump, because President Trump's the only guy that looked in the mirror every morning, checked his hair, and talked about the stock market. So all these kids that voted against, they don't like him. Now all of a sudden they like the stock market, and he talked about it. Obamacare is the opposite. You made money in that. So we got to think about, what is everyone so negative about? I think you got to go the opposite trade. I think that that's what the opportunity is going to be. And with all this money printing going to be coming into the system, there's going to be huge spending. There's massive pent-up demand. It takes 6 weeks to get a ship offloaded in LA Harbor for goods, the pent-up demand. People are waiting for their Samsung refrigerator 7 months.
Yeah.
So I think be long the market.
I actually had a friend trying to get a refrigerator. Nothing was stocked, and it was six months to get his new refrigerator. So it's funny that you said that. And so you think this is just a little blimp right now, this fear that we're seeing here, and you think we're everything's headed higher. Essentially, the inflation trade is alive and well.
And who could derail it would be Biden's, the rhetoric every time I see here coming out is taxes, and he's going to tax what corporations. That can stifle, but what it does is it channels money in different directions. So that's why you got to find government policies, raising rates, rising, falling. They're going to give the benefits to this industry versus that industry. We're going to go against the coal industry. Well, I don't care if they're cheap at a multiple to cash flow. Don't buy them. It's a bad trade. Look over at solar panels. Like, that's where it's going. Well, then what metal do they need? Silver. Silver has the surge. So it's recognizing right now there's a shortage of a lithium ion for batteries. Why? Because all the new vacuum cleaners have batteries on the back of it. I have my hair dryer, the big one for the backyard for all the leaves. Well, that's a lithium battery put on the back. Well, now you can go get one because there's a shortage of them. I think this is a really unique opportunity to think differently and use these other channels of information, such which you're providing to investors.
Beautiful. I love that. So do you anticipate the government and the Fed stepping in more, such as with interest rates? And we saw a little hiccup in new time houses, and then people are saying, well, are they going to step in more in terms of buying? Do you think we're essentially just headed into total MMT free money craze, where there's new infrastructure bill after new infrastructure bill after making sure everybody's getting some form of their free money, and they're just basically letting it rip for a while? You think that's...
I think so, and they'll tax the rich and have a whole expose on that's a rational reason, but and that's what's going to go on. But I think that America is such a creative nation. It just innovates its way through these problems, and they have some of the smartest people in DC. I know we can be negative, but I think at the very top of the end of it, there's some very smart people, and they always seem to pivot and make a decision. It's my job is to say, okay, where are they pivoting? As a basketball, are they taking the ball fake right and going to take it left? Well, that's the job of you're on defense, and I'm trying to figure where the fund flows are going, follow the money. But let's come back to basic economics. And you're a macro student. Every day money's being printed, and every day money's flowing. And the big institutional pension fund, they're moving this fund flows every day, and they're looking at that 10-year government bond yield. When is it good to buy versus buying the S&P 500? And what we saw is that money's buying into the S&P 500, well, the 10-year government yield goes vertical. I mean, I think it's way overdone and it's due for a big correction, and that will then take the market higher. But they just stopped buying. It's a boycott of that fund flow every day going into the market is now buying government bonds because the yield's up this high. And that's the sort of back and forth that takes place in the capital markets at a macro point of view. More important is to find out where the government's policies are, where they want to spend the money, and they're going to need picks and shovels. Get long picks and shovels.
Interesting. It makes a lot of sense what you're saying here. So one thing that we've seen Ray Dalio saying recently is essentially kind of a fear into the market of crypto and gold, saying there's going to be some insane government taxes. Many people are saying, they'll confiscate it. They talk about specifically with Bitcoin saying they're going to outlaw it. What is your feelings on that type of, headline that Ray made recently discussing both gold and Bitcoin, either crazy taxes or confiscation? And what is your feelings on both of those markets and the government being involved in them?
There's many moving parts when it comes to Bitcoin. The biggest miners in the world are the Chinese. And there is a sort of a conspiracy thinking the Chinese were trying to hurt the economy and the US dollar by becoming a major player in the Bitcoin space. But that's shifting. It's shifting to North America. And from both miners and equipment and capital formation, you're seeing just buckets of money going into crypto mining companies. The new pools, where mining pools. So I think there's a big shift taking place. Ray Dalio is using what happened in the 30s, that they did basically outlaw gold, and they took gold, the fixed price, from $20 to $35 in increments, and allowed the money printing to take place. So but if you had numismatics, then you were allowed to keep your gold. If you had gold jewelry, you were allowed to keep your gold. But if you're buying gold wafers or the GLD, that's what the government would try to reach out to stop that trade. And it's been done before, so that's the concern. Do I think it's going to happen? No, I don't think, but it could. It's happened before. Bitcoin, they can outlaw it, but I don't think that that's going to happen. I think that if you can see that they've tried to outlaw that in Latin American countries, but the biggest number of ATM machines where you can get a Bitcoin and convert to US dollars is in Miami and Orlando, for all the Latin Americans to get the money out of that country where they have currency controls. And in London, England, where you have for Eastern Europeans and Africans. So I think that Bitcoin's not going away. And I think it just accelerate the short-term volatility. I think it's a very elegant, it's a piece of art. It really is a Monet. That when you look at Bitcoin's algorithm, and I think the adoption of, of smart contracts, Ethereum, which is the second biggest currency, is unleashing DeFi, decentralized finance. And that's growing at an exponential rate. And it's important to understand that because stable coins use Ethereum's protocol. Stable coins, when JP Morgan came out with their stable coin in February of 2019, that was the bottom in crypto. They were trash talking crypto all along until they came out with their own stable coin. Then Facebook came out with a Libra coin, and then Bitcoin surged to 14,000. The G20 countries jumped all over Facebook, and all of a sudden it got knocked down Bitcoin along with their redoing what they're doing. But any of this decentralized finance appears to be using the protocol for Ethereum, and that's why as a mining company, Ethereum, we're the only one mining in an industrial scale. It's been extremely profitable for us. So I don't think it's going to outlaw. I think you're going to see a debate. The head of the SEC was teaching crypto and crypto logic, if you want to call it, at MIT. The logic behind that thought process. I think governments will try to slow it down like JP Morgan did, but they're not going to stop it. They're going to wait till they come up with their own crypto cash dollar conversion.
It seems like almost every day I'm reading of a new fund that's applying for a Bitcoin ETF somewhere. And I've thought that's kind of interesting. And then there was the thing released on JP Morgan's essentially Bitcoin ETF of holding other companies. Riot was in it, and MicroStrategy, a couple other. And I thought that was interesting too, essentially holding these companies with these large. So it does look like the trend of larger money as opposed to, just someone like me at my computer getting involved. It seems like the bigger money is. And these are the types of people you're having conversations with. Is that what it's looking like to you?
Well, it's interesting because I was trying to launch an ETF in Bitcoin over 4 years ago, and
Oh, wow.
doing all this research and realized quickly, due to anti-money laundering concerns, they call AML and KYC, know your client, the SEC just wasn't going to let it happen. And so I went to Canada, and I recognized there also it just wasn't going to happen. I had all this knowledge, and I was asked about, these young guys got this crypto mining business. What do you think? And I said, that's really interesting. And I was the co-founder and creation of Hive Blockchain. And it was the first crypto mining company, because every 10 minutes when you validate a Bitcoin transaction, you get a brand new coin. It's a virgin coin. It's untouched. You don't have an AML problem. So I said, I like this business. And it looked like, to me, the royalty business. And I love gold royalty companies. I've been involved in the ground floor of the creation of two of them, Franklin, Nevada and Wheaton Precious. So that business model I really admire. So when I took a look at Hive Blockchain, I said, okay, I'll be your institutional investor. I'll put up 5 million. And then immediately other institutions came in, and we launched it in the last quarter of 2017. Bitcoin went to 19,000. Hive raised $200 million. Predominantly, it's only from accredited investors, and it was from institutions like Fidelity. I had invested 3 times and gave us $100 million, and we built it out, lived through the crypto winter. It crashed, and it just moves. And Hive is, to date, the most profitable crypto mining company. It is listed over the counter in the US and Canada and Germany, and it traded 2.3 billion shares last year and was up much more than anyone else. It was up 1,500% over the 12-month period. And why? Is because I think they were the most profitable, and we kept doing these YouTube interviews of explaining crypto winter, then a crypto spring, and now it's taking off, and we have a new sector. So we see for Hive Blockchain, both retail and institutional investors are invested with it. And because of that 2 billion, the minnows attract the bigger institutional investors. And now we're in the process of doing our 20F filing to get listed on one of the exchanges in the US. And that's just a process that we're going through so that we'll be fully listed on one of the 2 major exchanges here. Because there's been such a pressure by our shareholders saying, we want you on a major exchange. So I understand the industry. I understand that a lot of people bought Hive were gold followers that I have from our gold funds that were reluctant to go onto an exchange because there's all these negative crypto exchange hackers, etc. So they use Hive as a proxy. And both today and when we first launched it, institutional retail have used it as a proxy, and that's why we have almost $50 million in crypto assets on our balance sheet, and also lots of cash, and we're growing.
Yeah, that's when I'm looking at it. To me, it seems like there's people in the gold sector, in the crypto sector, that see them as competitive. I feel like as soon as there's the next move from major government, central bankers, and they see how much they're flooding the system, I think money's going everywhere. And to me, it seems pretty interesting to watch larger money seeming to get involved in cryptocurrency. And that's been interesting to watch. Now, you said quite a few interesting things. You were discussing being a contrarian and the indicators you're looking at. And whenever I have someone, that's very successful like yourself, I want to also just kind of get into your thought process a little bit more, because right now it has been difficult for a lot of people in the world, right? And a lot of people have lost their jobs. A lot of people are behind on rent and their mortgage. A lot of people are afraid, they're worried, a lot of people have lost their businesses. A lot of people have had a rough going, and I want this channel to not just be, finance and investing, but also hear, what would you be doing right now? What's important for someone that says, look, this inflation trade seems to only get going. Currency devaluation seems to only get going. My purchasing power is going down. I need to double. I need to increase my income, my net worth, grow my business. And I'm having a tough time. I don't feel like I have any mentors around me. Frank, what's important right now for me, either mentally or tangibly, in getting to the next level right now?
Well, it's interesting you say that, because years ago when I was your age, good-looking, young, healthy guy with a family, I remember meeting and having lunch with Sir John Templeton. And Sir John Templeton opened up every meeting with a prayer and almost a meditation for divine providence. Will they protect us and heal us and guide us to make good decisions? Most people buy a stock and then say, oh God, please help it to go up. The magic is to pray before you buy it, is what Sir John said. So I tell it with sincerity that I think that mindfulness and being thoughtful, and MIT's done research on this, that if you have a positive intentions every day and positive expectations, that everyone gets setbacks, challenges, and disappointments, but the mindset is so key to resolve them. And if you have a positive mindset, you will see opportunities faster than the average person. And if you can feel the successes you've had previously, you'll attract them. You don't know, it might be open a book and there's the answer of the book, but you will find it. And I'm a big believer that mindfulness, thoughtfulness is important if you've been challenged. And it's easy when you've been in these lockdowns to be depressed. My son had a real challenging time with that. His business being greatly hurt by COVID, and being in Canada, being a total lockdown, was even now emotionally depression for him. And it's so important to wake up every day that you will find a solution to the problem. Have the faith. This is what makes America the greatest nation. No matter how many difficulties, it still is the greatest nation when you put it in the scale of the rest of the world for growth and for opportunities. And have that mindfulness, and you'll find the opportunities for investing. And diversify. Don't put all your eggs in one basket. I've said that my age is 66, so therefore 66% of my money should be in short-term income, and the other 44% should be in growth and more speculative. When it comes to gold and alternative asset classes like Hive blockchain and GoAU ETF, well, gold should be 10%. GoAU is a nice core position, and we balance each year. If you're going to speculate, my age, 2% in an alternative asset class like Hive is wise, I think, but not 35%. But if you're a young person, you can put in 10%. You can take that risk of speculation because you have a lot longer life span to be able to tolerate that risk. They're the type of things I try to share with investors. And I'm sorry if some of your listeners are going through those dry spells, those difficulties and those challenges, but the positive intentions and positive expectations, I'm a big believer that you will find a solution to them.
That was absolutely amazing. That was the first time I had ever heard that story about Sir John Templeton as well. That's really a fascinating story to hear. And
it's true. He always prayed before he had an annual meeting or a shareholder meeting that everyone in the audience bowed their heads and thank God for blessing us that we're alive.
I'm glad you said that too, because one thing that I notice there's so much, I guess, just to summarize it in one word, outer drama right now. There's a many, from political to economic, you go in any direction, but it's drama. And there's so much of it, and there's such a saturation of it, and there has been such a saturation of it through almost every information outlet, that it becomes really easy for our mind to get controlled by the outside world. And so I love what you said. It's essentially like turning down the volume to the most important things, which are the things you can control, which is opportunity and mind, right?
Correct. And remember, there's the opposite trade. A hurricane hits Florida. You want to be buying housing stocks because they have to rebuild, and insurance stocks are going to get hurt. There's always this opposite that you have to be able to have that contrarian thing. There's always an opportunity.
Awesome. I love it. I think it's a great way to end. For everyone, comment down below. There's always an opportunity. If you'd love to see Frank back on, we'd love to have him back on. Give us a comment down below. Any questions that I missed, but you heard it from Frank. Frank says that we are headed higher in gold and silver and crypto in the markets, and that there's opportunity out there if we can get our heads screwed on right to opportunities. And as you said, divine providence, and we'll attract great success. So make sure you hit the like button on this side right over there, this side right over there, to send this video out to more people. And Frank, thanks very much.
Peace, my friend. Take care.